when you start asking what is money, you start asking, well, what's the best monetary system? And we've got these three systems to talk about. Money is tokenized energy within a socio-political framework. So we know money is energy, but tokenized energy, that is a dollar is a measure of energy, a gold coin is a measure of energy, a bale of tobacco that you're trading it's a token of energy. And how much energy? Well, that's where the socio-political framework comes in. Whereas, I mean, you can measure actual physical or engineering energy and it's objective, but money ends up being to a certain degree subjective because it's, if I show up on a deserted island and I've got a stack of gold coins and everybody has guns and they're shooting each other, they might not accept my gold coin. Whereas if I actually offer them bullets for their gun, they might think the bullets are actually better money than the gold coin. Just like cigarettes, right, are good money in a POW camp, but gold coins wouldn't be. So this question of what is money gets you really going. So if money is tokenized energy within a social political framework, then we can look over the history of mankind and we realize that we've chosen many different ways to tokenize that energy. And we'll skip through most of them because they came and they went. But there are three that pop to mind that are interesting. One is the gold standard. The second is the fiat standard. And the third is the Bitcoin standard. And when you start asking what is money, you start asking, well, what's the best monetary system? And we've got these three systems to talk about. One thing that's pretty clear is that most people can't get their hands around Bitcoin because it's an utter paradigm shift. Well, because I think Bitcoin is the first digital money. I mean, it's the first digital money. Gold wasn't digital money, and fiat's not digital money either. And so economists and politicians and investors, they all lack the right mental model to understand Bitcoin because science and engineering were so intrinsic to gold that we took it for granted because gold was it's a 10-pound lump of something. And if you get slugged in the head with it, nobody had to explain that science and physics mattered. And then science and engineering kind of became like quasi-irrelevant in the fiat world. Everybody just kind of, they ignored science and engineering and there were no immediate clear consequences. There were just the hyperinflations and the collapses of those fiat systems. But because they abandoned gold and there was no digital money, the only alternative to one fiat, the Weimar Republic fiat currency was the pound, and that alternative, was an alternative to the next thing and the next thing. So we were comparing fiat currencies or fiat monies to each other. And so there was no real need to embrace science and engineering. And Bitcoin is this paradigm shift where we have digital money crashing into, I guess what we'll call an analog money, or maybe a political money is a better way to describe it. You've heard the phrase, Bitcoin is a shared immutable ledger, and people debate about whether it's truly immutable or not. But a crypto asset network, fully decentralized and mature, is the closest thing we can get to an immutable shared ledger in the history of the world. I think a lot of times when people describe it as a shared immutable ledger, they leave off the correct or the mathematically correct because it's almost implied. But I think that if you were to focus upon the three critical dimensions of ideal money, you would say it's a ledger that's shared. everybody in the political system has to have the same access to the ledger. It has to be immutable. No one can doctor it, but it has to be correct, mathematically complete or mathematically proper, because if it's incomplete, if I take that as a model, money is a shared, immutable, correct ledger, right? Then I can imagine the perfect money would be some godlike being comes down on earth and they create this perfect, uncorruptible system, and they telepathically drop that shared, immutable, correct ledger into the heads of every human being. And every time you incur a debt, it updates the ledger. And when you incur a credit, it updates the ledger. And no one can corrupt the ledger. So, I mean, there's a problem with the whole idea of coinage. And the problem with coinage is it's based on metallic money. And of course, the highest form of money is the gold. So let's say it's called the gold standard. But what's the problem with the gold standard? I mean, it never worked that well because it's got a couple of some crippling flaws and just some nagging flaws. There's inflation. Inflation's a nagging defect. It doesn't inflate fast. It's like it inflates slow, but it inflates at 2 or 3% a year. And because it's inflating, because you're mining more gold and you're striking more coins or whatever it is you're moving around, it's not conservative. And by that, I mean, it's not mathematically conservative, or it's not conservative from a scientific point of view. You start with 100 units, and then you've got 102 units, and then 105 units, and 108 units. So whatever percentage of the gold supply you have is leaking at 2 to 3% a year. And if it gets, and it could be worse if it's not a closed system. So if anybody introduces new gold into the system, like, when the Spaniards found the Inca gold, or they brought back the gold from the New World, you get a massive inflation. I think I remember reading a history of Caesar where when he came back after the Gallic Wars, he had seized so much gold that created a hyperinflation in Rome, and the interest rates leaped. And there was just too much money. And so either there's inflation because you seized gold, or another nation flooded your market with gold, or there's inflation because the gold mining process continues. And so against our ideal model of money, that means that gold's not mathematically correct. Mm-hmm. It's not conservative, nor is it correct. It's an approximation. Under the best of circumstances, it's got a 2% error a year. And so over the course of a decade, the best of circumstances is like a 20-25% error rate. Yeah. But the worst of circumstances is I double or triple the amount of gold when I come back from, sacking the Aztecs or the Incas, or I sacked Gaul and I just brought back all this gold. And so then you've just got a massive error. So gold is mathematically erroneous because you're just shuffling metallic tokens, and it's not a closed system. I mean, the second problem with gold is confiscation, right? Because it's physical. The custodial rights of gold they're not great. I guess they're a little bit better. They're a little bit better than fiat currency, but in some ways they're not as good. If I have a lot of gold, if I have $1 million worth of gold or $10 million worth of gold, it's heavy, really heavy. I can't get it through an airport. Just for kicks, let's just go and look at 12 months of performance. So it's quite a day, right? In 12 months, Bitcoin is up 240%. Gold is down 9.82%. Over the course of 10 years, Bitcoin is up 132% compounded annual growth rate. Gold is 94 basis points. The S&P index is 13.9% over 10 years, 33% over 1 year. Summary, right, is gold is not a store of value in the last decade. It's something opposite of a store of value. Mm-hmm. If the S&P is up 33% in 12 months, then a reasonable surrogate for the collapse of purchasing power of the currency in 12 months is, the inverse of that, right? But you could say you need 33.7% more money to buy the same share of the S&P.
Yep.
So a store of value has to clock at 33% or better. And gold is minus 40%. And Bitcoin is plus 200%. So that's the marketplace screaming at you that no one really sees gold as a monetary asset anymore, except for the gold bugs.